Ladies and gentlemen, welcome to the Fintech Friday special episode, now actually Saturday, joined here by the great and powerful Dan Dolev. Dan, how you doing?
Good. Just still reeling from like 2 weeks of earnings nonstop, and there's, a couple more coming up, but we're getting
Yeah.
there. We're getting there. Slowly but surely, we're getting there. It's big surprises this quarter. We'll talk about that.
Yeah.
Thanks for having me.
Along with Dan as a special guest, we also have Chris joining us and the usual Roy and Tevis. Chris, just real quick, because I didn't end up seeing you last night. How are you doing, buddy?
I'm good. Can't complain. Life is good. Busy, but good.
Guys, I say we jump right into SoFi. We'll hop into Robinhood afterwards, a couple of other names.
Mm-hmm.
Roy, do you have any questions to start? I don't want to hog the mic here.
Well, I was mostly going to leave it to Chris and Tevis because you guys have never had a chance, I think, to talk to Dan. But what I guess overall on your thoughts with SoFi's quarter, was there anything that stood out to you in particular from what they reported in their earnings?
Yeah, I mean, the most important thing is just those declining NCOs. I think this was sort of a shocker, right? Like, not a shocker, but there's so much fear out there on, like, you saw what Upstart was doing. It's all interrelated, right? That's why AFRM was trading down heading into the quarter. By the way, we had hopefully like a timely preview that sort of predicted that this was going to be a little bit of a false alarm. But I think if you think about these, like, NCOs are coming down, I think it's pretty remarkable, right? To see that, given all the fear about subprime auto and consumer lending and all that stuff, to me that was like the number one KPI that people are watching.
So I guess kind of on that same thread, like one of the things they talked about a lot on the call was this flight to quality, right? Where a lot of asset managers seem to be moving up the FICO score range. Can you talk about, so I listened to the Upstart call. I didn't have a chance to review like the AFRM earnings or listen to the call, but just generally, you're on more of these than we are, right? Can you talk about like what you're seeing that justifies that, or are there pockets where those lower FICO and subprime is doing fine, or what are you seeing on that front?
Yeah, it's a great question. I have to be on those, this is not
Right.
volunteering. And I think what's happening is this is literally the epitome of the K economy, what we're seeing right now. You're seeing that in every chart, you're seeing it everywhere. So basically, the people that are higher FICO are actually doing just fine. Everything's okay, business as usual, spend as usual, restaurants are full. And then the lower FICO are struggling. And, it's a sad story, but I'm not even, take like SNAP into it, and food stamps and all this stuff, right? It all kind of connects with the same theme, right? And that's why SoFi, which tend to be, remind me if I'm wrong, but like 745 FICO or 750 FICO, close to 750 FICO, is doing better than, say, an Upstart. Like, I love Upstart, but don't get me wrong, I love them, but they had to slow down originations, right? For that exact reason, right? And that's why the stock took a dive. So I think that's what you're seeing. That's the theme of the third quarter 2025 earnings. It's kind of, tell me your FICO and I tell you how you're doing.
Tanner, you muted.
I was going to say that luckily SoFi's on that higher end, so we didn't feel it too much. I mean,
I agree. I mean, look, if you're like a skeptic, which I'm not, right? So what you would say, and this is actually a really interesting point that needs to be flashed out, right? Like, we need to talk about it. Like, a lot of people that take personal loans on SoFi take it to refinance credit card debt, right? So the key question is, like, I think the key question is, yes, what FICO are you, and is your FICO inflated? I don't think so. I'm a big believer in SoFi, as you know, huge bull. Hopefully one of the resident street bulls on SoFi. But you have to keep it in mind that at some point you want to know basically like what the true underlying, health of the consumer is that's taking those loans. I think you want to make sure, right? It's like trust but verify. You want to make sure that the FICO is not inflated and it's a true FICO. Because to be honest, right, if you're refinancing credit card debt, that is not an amazing situation to be in. I'd say just like generally speaking. So hopefully I think the reason is they're getting a much better rate at SoFi, and that's perfectly fine. But you want to make sure you don't roll that into the next refinance and the next refinance. So I don't think that's going to happen, but in this very distinguished forum of yours, we have to, we have to educate, your viewers about, what's going on in fintech, and that's part of it.
Well, to start a little bit, I probably should have given you a little bit of a introduction. Most people know you; they've seen you on a lot of channels. But Dan, you cover SoFi. I actually think you're leading the street right now on the price target. You raised it this quarter from $31 to $38 on October 29th.
Yeah.
Is this all from the decreasing rates or surprise on NCOs, or is there other things that you're seeing that is getting your team really excited on SoFi?
No, that's just kicking the tires, right? The reason we're so bulled up on SoFi, I think that's the only, and we've said this, we've talked about it in the past. This is the only fully functioning Revolut in the US, right? You've got Chime. I don't cover Chime, but, kind of like don't want to waste my Chime there. But they're they really live in, yeah, I had to say that, right? They really live in sort of low FICO land. Like, but SoFi really created a full-fledged bank. What we really like about SoFi, and the reason we're so bullish and we raise our price target, is because, call it the way you want, but they did figure out how to like create an online bank, no branches, great funnel, right? Is you can call it a funnel, and like maybe you call it a mousetrap, doesn't matter. And there's just so many more catalysts coming down the road, right? Like now you've been through this personal loan wave, but guess what? They have a student loan refinancing, and if rates are coming down, that's great for student loans. They have a mortgage origination channel. If there's a next wave of mortgages coming as rates come down, they're going to benefit from it greatly. And then on top of all of that, they've built that lending platform, which helps them originate without having to worry about tier one ratios, raising capital, and all that. So it's like a perfect funnel. And I should go back and look at that. But I remember when they reported, like a lot of these metrics got better, right? Like kind of revenue per user, product per user, everything is moving up into the right. And I think that's the reason we felt more confident about SoFi. That what I mentioned about NCOs is just, I would call it putting kicking the tires, making sure that the machine is healthy, inside kind of the all these great things that are happening.
So one question I have, just sticking with the raise to $38, like Tanner said, you are leading the street. I mean, I think it was kind of interesting because one of the things that was mentioned was, you think that the company is just going to beat and raise next quarter, and that the guidance remains conservative. And we've been saying that for a while now, that this management team sandbags and they set themselves up for success. I mean, you can just look at their earnings history. Every single earnings, I think, as a public company, they've raised and they've beat. What do you think so many analysts miss about SoFi? And also, I see a lot of analysts that take management at their word, but not only that, but then sandbags management's guidance even further. And then you just look at the sort of proof in the pudding in terms of what they actually release, and it's drastically different. And so you have this massive discrepancy. And I think you guys are more spot on than others. So what do you think is the delta there?
Let's kind of parse your question into two. Like, I'll answer it two different ways, right? One, give you like a little bit of a personal thing. I mean, I'm always 100% honest. I reached out to the IR after they reported earnings, and as we were working through our model, and it was like, this just doesn't make sense. The numbers are just so conservative. Like, given what they put, in 3Q year to date, and what they're guiding to, I'm like, they're gonna like just hit it out of the park, into the parking lot, right? Literally into the parking lot. And it just didn't make sense, right? And their response was, yeah, this is our guidance, et cetera. So I mean, I'm with you with that 100%. The guidance is silly. Let me put it that way. I mean, they're gonna. This is a sort of one of the best beat and raise stories. The other one is AFRM. We'll talk about that in a second. But the SoFi is one of the best beat and raise stories. Again, assuming market conditions remain what they are, right? There's an enormous appetite on the private credit side for these loans right now, right? You hope the music doesn't stop, right? Like it doesn't seem to be stopping. I mean, there's like fears like left and right, but as long as the music doesn't stop, there's enormous appetite for this paper on the other side. So I think this is right. To answer your other question, what people are missing, and this has been like our thesis for the better part of the last 3 years. Like I think I mentioned it to you. I was sitting at this like lunch, and people were telling me you need to downgrade this. This was like 3 years ago. Very, very smart investors, and they're all looking at like price to book ratios, and it's a $3 stock, and they'll get ahead of this, et cetera, et cetera. And I was like, no, I'm looking at it as a fintech tech investors prism, and I think the people that are just like anchored to viewing it as a bank are missing the point. And I think that's the discrepancy. By the way, like fun fact, I heard the same thing about Robinhood when they went public. I got all these calls. Like Mizuho was on the consortium. So what happens is when you're on the consortium, you get to speak to investors about, they want to hear your views, ahead of it's like a regular process, right? It's the process of kind of like you're talking to people, and there's a certain period where you're allowed to talk to people, to investors, and kind of discuss, so they want to hear what you're thinking about the model, et cetera. It's part of there's a very set process in an IPO. So we've heard this from like, it was in the hands of these exchange investors, and the exchange investors were like, look, I'm looking at Schwab, I'm looking at Interactive Brokers, and this is where it fits into my little calculus. And I think they missed the point. Like if you were like in this mindset, you're probably right for like a year, but then you missed like the whole ride from like 20 to 150 or wherever 145, wherever it peaked. So we're not there. I think we're freed from these prejudices, and I think that's what kind of helped us get SoFi right. That's my thesis. I mean, I'm interested in your views on how you guys view it as well.
Yeah, it was always weird when they acquired a banking charter and all of a sudden they should be valued less. That made no sense. And that's the clearest way to understand that those that are saying that SoFi is just a bank, it should be valued based on its tangible book value, are highly mistaken. Plus, also the growth is a huge factor.
So
Yeah,
I guess,
exactly. And just to add to your point, right? This gives you, it's exactly when you acquire a banking charter, you're then immediately get sort of penalized by being put in the bucket of Cap One, Synchrony, and all these guys, and there's a ceiling on your valuation. Whereas in what happened, in effect, it just gave them lower cost of capital. I just view it like that. I'm like, just lower cost of capital. It's great. Let's move on. It's an amazing fintech.
so you cover a lot of fintech companies, right? And a lot of the pushback several years ago, it's a little bit different now. But a lot of the pushback, at least that I got back then, is I'd have people say like, well, personal loans or buy now, pay later, or any of these other things that these fintechs or brokerage, right, with Robinhood, any of these things that these fintechs are building, it's a commoditized market. So they're not going to be able to have any edge in this commoditized market. How do you think about, so how is it that the SoFis and the Robinhoods are winning? What is different about what they're doing that allows them to win in a commoditized, in what people would call a commoditized market?
In the personal loan space,
In personal loan
or
space for SoFi specifically, or the brokerage space for Robinhood, or buy now, pay later for AFRM. What is different? Like, so what is the
I mean,
differentiating factor?
it's
You brought up those three specifically as ones that are winning, that are
mhm.
consistently getting beaten race quarters. What's different about what they're doing versus, say, a lending club or something like that, or a Schwab?
They've captured, they both captured sort of the spirit of a new generation, and I think that's what's different, right? Robinhood is sort of the quintessential example of the best, user experience a millennial or a Gen Z could think about. And and then the other guys are just boomers, right? So you're basically competing with boomers and young people, right? Which unfortunately I'm not part of that group, seem to flock to these, very they're just catering to a certain generation of this 18 to 34-year-olds the way those people want to trade. And SoFi is doing the same thing. They're catering. I mean, SoFi is a little bit different. They just built a great brand. So I think it's not homogenous story, right? You can't just say like this is the cookie cutter approach of building a successful fintech, right? If it was that easy, I'd probably quit my job and do it myself, right? But I'm just kidding. I love my job too much, but it's not that easy, right? So Robinhood did, that with a great approach. SoFi did it with, a great brand, SoFi Stadium, lower cost of capital, great, call it funnel, call it mousetrap of bringing in people through that personal loan. But look, I have some, money at SoFi. They're giving a great yield. So it's not a one, it's not a one-stop shop or a one-stop solution. But I think that's it. Hopefully that answers your question, right? In kind of how I think about these things.
Yeah, that they have all kind of found a niche way to
Yeah,
outperform everybody else.
exactly. And it's not cookie cutter, right? You can't just be like, okay, this is the way to do it. It's probably what not to do. But I think competing with boomers, and boomers being on the bank side, like go try to do your I mean, I bank with, Chase. It's like, it's kind of clunky, right? When I want to do like bill payments, or, when I wanted it, and I could see why people are very excited about banking with SoFi. I'm sure it's a much better experience. I'm not using SoFi on like a day-to-day basis. I just, put some, money there for high yield. So I'm not using any of the other products, but I probably should. But my point here is it's probably should be my primary bank, but maybe it will be at some point. We have a little bit. My wife's like very conservative. Like she's like, what is this? What is this? Like, are they going to run away? Like she's worried about. Like, you trust them? I'm like,
doesn't trust the analyst that she's living with, to tell her that it's a registered bank.
she knows me. She knows me too well.
Yeah.
How could you trust? She knows, right? So
Who
it's
is
like
this
it's like
Sophia
your
that you're
mom. She knows
talking
you
about?
best. You know what I mean? What were you saying?
I was going to say, who is this Sophia you keep talking about? In other words, so.
Yeah, exactly. Who's Sophia, right? Like that, she goes through my WhatsApp. She's like, "Who are you talking to?" Right?
You
No, but that's
you
the thing, right? It's sort of like conservatism versus, but you're competing with boomers, and the same thing for Robinhood. You're competing with some of those, guys who are just like antiquated.
you had highlighted Robinhood earlier in your discussion with Chris there. You also have a very high price target on that retail name. After earnings, you increased your price from 145 to 172 on
Yep.
Robinhood. Tell us sort of Vlad's vision and what's getting you so excited about Robinhood markets.
Robinhood is there's not enough superlatives to throw on Robinhood these days. But like if you go back, we were all at that Analyst Day, right? And we kind of hung out there, and they were talking about this $600 billion TAM. And I've never seen a company that's just so eager to go after this TAM. I almost think of it as a story. It's like a tale of two fintech stocks, right? You've got, and I'm not a hater on Coinbase, I'm neutral, but it's a tale of two fintech stocks. Like one is literally leading in terms of product velocity. I remember we saw each other in Vegas, and then, I'm like, I should thank Vlad for helping me with mileage, accumulation, because all these events that I go to, I'm getting a lot of miles for that, right? and he's got all these free flights are, gratitude to Vlad. But I mean, this is what makes us excited. So, I mean, the trends look great for October. Everything accelerated in October, like everything important, right? And I mean, there's some of those October, I called it like the Oktoberfest, right? Everything got better in October. Numbers are huge, right? And I mean, $300 million of, prediction market run rate out of the gate. They just started it. Remember, he kind of he like name dropped it at the analyst day, and I think it was DraftKings or one of these guys plunged 10% on that, on him saying we might get into prediction markets. Boom, 10 months later, they're leading prediction markets. That's what gets me excited about Robinhood. It's just they're making it happen, and they're making it happen big. And now they're going to Asia, they're going to Europe, they're doing tokenized. There's the AI event coming up, I think, right?
Mm-hmm. Yep.
It's like it's hard to keep up with that. I almost need to just have a dedicated person just to cover Robinhood because there's just so much going on.
I'm curious. So I think, with Robinhood, one of the big pieces, at least that I see, is the opportunity in the prediction markets. And then the other one is the thing that Vlad keeps pushing really hard, which is, and really interesting, we've had a bunch of conversations here about it, tokenization, right? With Hood rolling out tokenized US stocks in Europe, what do you see as that opportunity for tokenization? And versus, like, from a TAM perspective, but also versus from a regulatory perspective, like how bullish is that in your wider thesis for Robinhood? Maybe not 12 months, but even on a multi-year perspective.
Yeah, I don't even think, and correct me if I'm wrong, I don't think this is a big part of that $600 billion TAM. I think this is all like just this and sports, and I call it sports betting, but prediction markets is a bigger thing, is incremental to that. I think this could be huge. Like, we haven't done like the deep dive, the due diligence deep dive that we typically do. Just we haven't had a chance. It's so new. But I would tell you, I mean, from my understanding, and I grew up in Israel, and and in Europe actually, and in Germany, and there's and I spent a lot of time there. There's enormous appetite to trade U.S. stocks. And I think with tokenizing equities, we'll talk about tokenizing private companies too, but with tokenized equities, I've heard, like, for example, there's like certain countries where you have like a little bit of like a small tax if you want to buy a US stock, right? Like a 2% tax. So by tokenizing equities, especially for small time retail investors that don't really care about voting, voting rights, and and like annual general meeting and all that stuff, right? For them, it's great because you're speeding up the process, you're lowering the cost of acquiring, and you trust Robinhood for minting a token on the other side. By the way, you call me crazy, but this to me is the real use case of blockchain. It's not, it's not sort of trading altcoins, up and down, right? This is what blockchain was created for, to basically help facilitate money movement in a much more efficient way, and part of it is tokenized. So I'm very bullish. Like, I'm bullish for them. I'm also bullish on eToro for that. They're also leading the charge on this. We're actually having dinner with management on Monday, so I'm going to ask them about this. So we're having dinner with Yoni on Monday after they report, Monday evening in New York, after they report, and the whole team's going to be there, and I'm very curious in asking them what they're doing on this forefront. So this is a huge opportunity for Robinhood, but also for some of the other guys that are engaged. Gemini, for example.
One of the things that you highlighted was just the sheer amount of new products that Robinhood has been getting into: prediction markets, crypto, the new credit card, all of these different industries. Some of them through acquisition, some of them not. One of them that we've seen recently, maybe you've had some experience with it, I don't know, but is Robinhood Banking. How do you think that this competes with SoFi names? Do you think that the market's so big that they don't even essentially, there's no Venn diagram here, or will there be some competition in the middle?
Okay, you've asked the most important question of this podcast, thus far. I'm very bullish on all of you guys. but you've asked the most important point. Here's the deal. And this is what we've been saying. Yeah. This is what we've been saying. You're the Canadian guy, right?
I am that Canadian
I
guy.
know,
Yeah.
I'm just kidding.
Tevis also
Smart.
Canadian.
Exactly. Smart Canadian. Now, here's the thing. This is the holy grail, right? And this is what people don't understand. At the end of the day, right? Everybody wants to be your bank. And there's different ways to, and this is what's coming, it's coming up more and more in my normal like marketing meetings with institutional investors, which is actually like my bread and butter. Like this is how this is how we make money. Is I do a lot of meetings, I talk to a lot of people, I talk to people in Boston, I talk to people in Baltimore. I mean, this is how we, and it's coming up more and more, and I think people are starting to get it. The holy grail is be your bank. There's like a 5 to 6x multiplier on your spend. I think a firm said that when you actually use the card and you give direct deposit, there's like a multiplier. I think even Square or Block said. I think
Yeah,
I'm
I think
allowed
it was
to say
Block
Square.
that said it.
I'm allowed to say Square. I think, right? Like the old timers, the OGs are allowed to still say Square. It's like there's a cutoff. So
I still say Square too. I'm in your.
it's
I think I'm pretty similar in age to you, Dan.
it's such a better brand. I mean, I hope they don't hate me for saying that, but Square is just such a good. It's like, you know what I mean. But yeah, that aside, I think Square said it, but it's true for everyone. What's true for Square is true for everyone. Everybody wants to be your bank because at the end of the day, your paycheck is the holy grail. And I think that next leg to Robinhood, to answer your question, if they can actually start getting people's paychecks and offer banking services without calling it a bank, just banking as a service, whatever, it's going to be huge because you're going to trade more, you're going to do more, you're going to take a mortgage. Right now they're doing like this partnership with on the mortgages, right? With I forgot the name of it, but
Sage.
Sage. Yeah, it was just announced this week. So all these things are leading up to like a full-fledged financial services company, and that's the holy grail. So Tanner, this is the holy grail, and I'm very, very bullish about this. This is 26, 27. This is not now. And so I think that the emergence from just like a casino to a full-fledged financial services company is going to do Robinhood really, really well.
So if I
you
ahead,
can go. Okay. Well, so like one more thing related to Robinhood and the predictions market. So extreme ridiculous acceleration, but there are some that would push back. And of course, I think we're all pretty bullish on Robinhood here, and it's my biggest position too. But between regulation and also competition, DraftKings, of course, is now getting into predictions market. We see Polymarket partnering with Google. That's going to be launching soon. And then at the very end of the Coinbase shareholder meeting, or the earnings call, Brian Armstrong deliberately had the list of words that was on Polymarket, I believe, maybe it was Kalshi, and then made sure that he had all the mentions. So is regulation something that could really disrupt this train and competition as well? Or is the acceleration so immense that it's not really a factor, at least for this year for Robinhood?
I mean, not in the next 12 years. I'm just kidding. Like not in the next like 3.5 years, right? Like I think the regulator has, like Elvis, has left the building, right? I think we're in a world like that. This, the new administration, like it or not, is very pro business and pro crypto, right? I mean, the president's family itself is involved with some of these things, right? And I think that just the runway is wide open for at least from a regulatory front, for all these things to be very conducive, or the regulator to be very conducive to these ventures. I would say that's the least worry. The bigger worry is probably more. I mean, competition is always a concern, but like we've done research, and I think we talked about it last time. We've done this. You mentioned the Venn diagram before. We've done some research, and we've asked people that trade on Robinhood and people that do sports betting on like the DraftKings of the world. It's literally the same people, right? It's the same users. So why not just offer them a one-stop shop solution, right? I mean, it's like, think about the analogy. Like Think about like a resort versus like a hotel and a country club. What's better, the resort or a hotel and a country club? You go to sleep here and then you go to the country club there. The resort, you get to sleep and you go to the pool. Resort beats the hotel and the country club. And I think Robinhood is the resort of everything trading. It's a good title. Maybe I'll use it one day. The
Like it.
resort. The four seasons of trading.
There you go. So I have a question. This is just something. So I think that Robinhood's going to continue winning. One of the metrics that I look at and that so banking's obviously going to help with this because it's going to increase wallet share even further. But one of the things that I look at and I just think that looks a little unsustainable is like, so the number of funded accounts over the last year has grown like 10%. It went from like 24 to like 26 million, thereabouts. But then the total assets on the platform are up like 113%. And so I guess as you look at this, and this is something I would ask these guys, but we can do that on a different stream, right? But I'll ask you right now. How do they continue growing the assets on the platform at this huge rate if the user growth is so much smaller?
But that's the whole thing, right? I'll answer it again to just because I hope I have some perspective on the industry just by covering all these names. This is what got Square for a long time. It's people started debating. Block. Yeah, sorry.
No, I'm just kidding.
I thought we agreed that we're allowed to say Square here. I just called Dorsey.
The guys on the bottom can say Square because we used it when it literally was a square that you plugged into the
It's just save space. Daniel.
I just called Dorsey, and when you didn't notice, and he said it's okay to say Square. I'm just kidding. So I think to answer your question, I think that's what got Block or Cash App. Let's talk about Cash App. The debate for a while went from like product per user, inflows per user, monetization per user, even though they've done greatly there, to like how many users. And I think at some point you want to make sure, and I think Robinhood is at the forefront of this. So Vlad's really smart, and he knows that like you don't want to rely just on this 26.7 million number funded accounts. Like you want to keep growing, the flywheel, and I think that kind of ties back into the Venn diagram. Yeah, so if those same people are going to do more, if they're going to give me their paycheck and they're going to do more prediction markets on my app, and they're going to do, they're going to take a mortgage, and so the inflows. That's going to be very good for the inflows, and I think that's going to make that story much more important than that incremental. Because, look, obviously the next move from like 0 to 27 million, to 27 million to 60 million, any chart, any mathematical chart in the world would show you that things don't go just like this. Like at some point there's a plateau. I don't think they're there for Robinhood because they're going globally, but it's harder because you already are tapping a lot of the TAM. So I think it's very, very smart what they're doing. To your point, that's the number one reason I'm bullish about this is the fact that they're getting more engagement per user quickly, and it steers the conversation away from funded accounts or MAUs, because that's what really got the Cash App. Still getting the Cash App, right? We didn't talk about this, but they reported this week, and like everyone was just worried about one number. It's like, is it going to be 56? Is it going to be 57? It ended up being 50 million, and the stock was down 10%. Go figure. I can tell you why, but
yeah, we are, to be very honest with you, not super fans of Cash App, mainly due to the user growth and just the lack of getting to that rule of 40 that we thought that they were going to get to a little bit earlier.
Interesting.
But we're super big fans of SoFi, Robinhood. We all have different portfolios. We're not an investing group, but and there's another comment that I wanted to ask you, because you made some comments about Coinbase. Do you think that Robinhood is going to take more market share than Coinbase eventually in consumer crypto volume?
100%. I have no doubt.
100%.
Yeah, I have conviction, man. I'm here to
I
give you
love it.
like
I love it.
like we make calls. I mean, look, we're neutral on Coinbase. I'm not a hater. I think I used to be a hater. Uh, It's okay. It's got a good. There is a place for Coinbase. You know what I mean? Like it's, but I'm not excited about it the same way I'm excited about Robinhood because I think they're 6 to 12 months behind on the innovation curve. I think that just being so myopically focused on crypto might be too risky. I think their take rates are too high. I think eventually there is an opportunity for Robinhood to even raise the take rates, and there might be some upward pressure or downward pressure on coin. It hasn't really happened yet, to give them credit, right? And we can talk about like a little bit then the nuances that happened with the institutional take rate, right? That's more Deribit. It has to do with Deribit because the denominator stayed the same and the numerator got bigger. So it optically looked like the institutional take rate went higher. It actually did not. It's a
That
mix effect.
uh,
But that's
I don't
hopefully I'm
follow
answering your question.
I don't follow the name very closely. The Deribit is their options or derivatives platform, right?
Yeah, they made an acquisition and it added revenue, right? But the way they report volumes, it's spot trading volumes. So from an optical perspective, right, the denominator stayed the same. The numerator got bigger. It looked like the take rate was improving dramatically, I think from like 3 to 6 basis points in institutional. And a lot of people, including us, got really excited about it. But I think we wrote about this. If you kind of parse it out, things haven't really changed. Not for the better, not for the worse on the institutional side. But guess what? I think Bitstamps, there's a big institutional story there too.
Mhm.
I keep calling it Bitstamps. It's Bitstamp, right? All right, sorry about that. Sorry, Vlad. No, I think I even called it Bitstamps on the conference call. But Bitstamp, there's an institutional story there too. So Robinhood is like also going after that, right? It used to be sort of like retail central, but I think they said it on the call. I think that they aim to also be like a big institutional player. So that's the reason, like they're going up, they're attacking behind enemy lines, right? If Coinbase was sort of the owner of the institutional story up until a year ago, I think Robinhood is actually going after that institutional story too. And you know what happens when they're aggressively going after something, they win. So I'm very bullish.
We've even seen a lot of volume this quarter already. I mean, it's incredible.
Do you
Yeah,
think so?
I
While we're
call it
talking about this, so
Oktoberfest.
I'm sorry.
Oktoberfest
I was going
in
to say,
crypto.
so with SoFi entering crypto, now you've got like Wells Fargo and Chase and all these other companies. Do you think that that's going to spell like Coinbase has been able to keep their take rates pretty high? What is there a catalyst like that drives that down? Is it more players entering the market, or is it just because? Do you think that even with their name brand recognition, because Robinhood's way lower than them already, right? And it is taking market share, but Coinbase still is such a market share leader. Is there something that does eventually force them to bring their take rates down, or that makes it more difficult for them, or how do you see that playing out?
Yeah, I've been thinking about this a lot, as you could tell. Uh, it's our thesis. Don't get me wrong that the take rates are too high on Coinbase. That's been our thesis for a long time. I think the market for crypto as of today is incredibly price inelastic, which means in plain English is you can raise pricing and demand doesn't change. The the and I'm trying to think hard about why that's happening. Like I want to be very realistic. Like I from a pure economic perspective, it has to come down. But something in crypto, maybe I think part of it has to do with moral hazard. And we can talk about that too, right? Which is like the market has been taught to buy the dip. And so no one really, I mean, unless you bought was it Terra Luna
Yeah.
that imploded? Unless you bought Terra Luna the day before it imploded and that was your entire net worth, right? Which is what percent of crypto investors are in that trade? Probably like a fraction of a basis point, right? Then you were taught that crypto keeps going up and Bitcoin is at 100,000 and it snaps back, right? So I think that this creates it's like, when you feel really good and then you're just like tipping more at the restaurant, right? So you don't really care. So I think that's why the price, it's not, we're not pushing elbows yet. We're not sort of like in that position where it's like neck and neck and like and it hasn't happened. Not to say it will not happen in the future, but I think this is something that I think about this a lot. Our team thinks about this a lot. And so it's our thesis, but I'm not seeing it happening yet. I mean, every quarter I'm shocked by how resilient those take rates are.
Yeah,
Which is good for Robinhood, by the way, because you have upside. Like I think their average take rates is in like the 70s, 80s. I mean, they can go up more, right? And still keep gaining share. Sorry about that.
So I was just gonna say I've had the same thesis for a while and haven't seen it like exactly like you've seen. Like every single quarter, it seems so resilient. And
Yeah.
Anyway, I just wanted to get your thoughts because
Yeah. I'm thinking. I mean, I think about this a lot. I'm just like, this makes no sense economically. Like, you should have, in a perfect competition. Like, I am letting you trade Bitcoin for this, and I'm letting you trade Bitcoin for this. You should come here and trade Bitcoin. And it's not happening. And people are not stupid. So I'm trying to think about what is really happening. What is the real reason this is not happening? And I'm maybe overthinking it, but part of my job is to overthink. So unfortunately, that's what kind of like, that's all I do is overthink.
So
Tanner,
Dan,
you did it again.
I noticed that you covered FIGR. For some reason, I had missed that before. Of course, Mark Cagney was the original founder of SoFi as well. Cagney has thrown out the idea of there being like a magnificent seven or different number of crypto at some point. He thinks FIGR is one of those. I'm kind of curious on your overall thoughts on FIGR. I see that you rated it as outperform. But also beyond just those thoughts, do you think that his thesis as far as a magnificent whatever of crypto is true? And if so, what might be some other names that break into that?
Yeah. So I'm glad you brought it up because FIGR is really interesting. FIGR is amazing. It's just not crypto. And I think that, I give you a little bit of a personal thing. Like they had an analyst day. So Mizuho and obviously me as the analyst, we were part of the, on the S1, you could see Mizuho's name. And so what happens typically is there's an analyst day. So it was, downtown in New York, breakfast, coffee, and listening to the story. And then I just turned to my, I have a great team. And so one of my team members was there, Eyal, and I turned to him and I was like, after 4 hours, I'm like, what are they talking about? And he's like, no, don't worry about it. It's not blockchain. It's an amazing HELOC marketplace. I'm like, okay, I get it now. So he sniffed it out. And I think that's the key thing here. Like, they're making this big story about Mag 7 crypto. And I think they want, by the way, it hurt them this week. We'll talk about that in a second. But because I get these calls, or we get these calls from investors saying, why is the stock down 9%? I'm like, yeah, because they tied themselves to this crypto story, right?
Yep.
It's an amazing company. It's probably one of the highest quality companies that we cover in our space, but it's just not crypto as of yet. It's just a very efficient, very smart. Mike Cagney's a very smart guy, built SoFi, right? So what, how could we not like him? HELOC marketplace, and that's getting a bigger part, right? With this like FIGR Connect, et cetera. This is going to be a bigger part of their story, especially. And and one last famous words on this one is why do we like it so much now? Because if you think about this, like real estate values, other than mine in New York City, have gone up a lot across different zip codes, and there's going to be a big if rates come if rates come down, people are going to want to take advantage, and there's going to be a huge HELOC refinancing wave that we think is going to happen. And FIGR stands there as a more efficient. I think they lower the cost of mortgages by from $10,000 to like $700, and they take it. It takes days instead of like weeks to originate. So what's not to like about it? They're going to keep gaining share, and so it's great. It's just not crypto now. It will be at some point. They're going to put everything on the blockchain, etc. I get it, all good, but right now it's not blockchain. I mean, as of November, whatever it is today.
Can I pivot over to PayPal really quick?
Yeah.
This has been a name that you've been quite positive on, especially with the new management with Alex Chris, who's doing a fantastic job. How are you feeling about PayPal right now? Are you still just as bullish as you were last quarter? Any updates, any insight would be great.
Yeah, feeling great. I'm actually seeing Alex next month for breakfast. We're doing like a big breakfast, so we should talk about after that. I feel like PayPal has always been sort of misunderstood. 80+% of their pre-tax profits are outside the US, and if you look at the data, they're not losing share. I mean, I'd say they're not exposed to the highest flyers. Like if you think about the top 1-2% of e-com, that's Amazon and Shop, right? They don't have exposure to that, so that hurts them. But on the website that they exist on, they are doing really well, right? They're growing in line with those websites, right? And on the e-com side, like we've actually done the fundamental analysis that shows you that, right? I can prove you to that. I can prove that in numbers, right? So it's a big, aircraft carrier. It's very hard to turn it, but I think he's on his way, right? So if the new experience goes from 25%, I think right now it's 15. I think now it's like 25% of the total, basically branded checkout experience. If that continues to creep up, that should help, accelerate the organic growth. Like I can truly see them doing like 6-7%, say in a year, right? So if that happens, buy now, pay later, they're crushing Klarna in Europe, right? Like merchants are rolling out the red carpet for PayPal in Europe, and there's two reasons for that. Because they don't want to. A lot of merchants don't want to work with Klarna because they charge an affiliate fee, and also because they put you in sort of gen pop. They put you in this like on their website, and then you're competing with other merchants. I'm not talking about like Amazon. I'm talking about like this, main, everyday merchants, right? And they don't want to do this. So the PayPal Pay Later button is much better in that sense. And you see that with all these partners like KKR that are buying their receivables, you're seeing that there's huge demand for that, for those loans. So I think it's not one thing. It's like the, amalgamation of a multiple catalyst. One day you're going to wake up, whether it's like Q4 or Q1 20, Q4 25 or Q1 26 or Q2, and it's going to be like a shocker, and everything's going to work, right? Like everything's going to work at once, and that's why you own it. Plus, Android is a share gainer globally. People with non-iPhones don't really know what we're talking about here. They're like, yeah, PayPal is great, right? So it's like I feel like it's like a tale of two worlds, right? Like there's the iPhone users that see no value. Fair disclosure, I'm not a big PayPal user myself, but there's a lot. I mean, I don't trade stocks on Robinhood, and I could see the value there. So you don't have to, you know what I mean? You don't have to like use it to know the value in it. So big fan. I think at some point people are going to wake up to it.
I'm Canadian and just walking blind through all of these apps. I've never even seen any of them. Oh,
eventually you guys will
that's
get
amazing.
Smartphones, Tanner.
Yeah,
I believe
but
it.
you can use Wonderful or whatever it's called. Wonderfi.
Wonderfi, yeah.
Wonderfi.
And by the way, never even heard of it. It's not even an app that we use here at all.
What about Mogo?
Which one?
Mogo in Canada?
Oh yeah, okay. I wouldn't say that's very
Greg
popular
Feller.
either.
My friend, my friend Greg Feller. They seem to be doing well, but I'm
sure
a
they're
fan
doing
of Greg,
fine.
but I don't know the app.
I just mean
It's amazing how close you are.
Taken over.
Yeah, it's amazing how close you are, and you're speaking the same language, but you're like oceans apart.
Yeah, I know.
From like civilization. What's going on there, man?
Couple Great Lakes apart. I want to know as well, because I've not been following the story, but this has been huge, and I actually just looked it up. You cover this name. How many names? First of all, do you know how many stocks that your team covers?
About, I think roughly like 24, 25, but it growing. Like there's a lot of stuff I can't talk about. There's a lot of IPOs in the pipeline that I cannot talk about right now. But at some point when they go public, then we'll cover them. You know what I mean? Like it's assuming we're involved, but I can't, obviously I can't.
No problem. I want to know about actually a much more legacy business.
Yeah, Fiserv.
There you go. Fiserv.
Did I read your mind? Did I read your mind?
Yep.
Yeah.
What the heck happened at Fiserv?
Yep.
Actually, Actually, not. You want to hear the funny story? Nothing happened. It's the same that it was. Look, I mean, Clover is. Yeah, I see the chart there. Yikes.
From
Zoom out even further. There
Yeah,
you
from
go.
240 down to
yeah.
130, and then just recently dropped down to 63.
It's
It
surprising how this chart looks just like my career, actually.
No, not
looks like
uh,
PayPal a bit too. So
quite
So
the
what?
opposite.
No, I'll tell you what happened. I'll tell you what happened. I have a PhD in Fiserv. I mean, this is what happened. So there's two things that happen, right? One is you've had a lot of movement. So a lot of their business in payments and merchant acquiring in Canada, not in Canada, like delivery. Sorry, in Argentina. So it's funny, like Freudian. I put you together with Argentina. There's something there.
You
You
just
guys in
saw the chart
Argentina.
and then you were like,
This
Canada.
I was like, yeah, Canada, and I was like thinking Argentina, and I had Canada in my head. So in Argentina, a lot of their business, the way people do it's like merchant advance. People take like small, to take loans to pay, and they facilitate some of that. And so just the movement of the FX in Argentina and interest rates in Argentina really, really boosted growth last year. And then Milei came to power, curbed inflation, rates came down, and everything that was good for them went bad. So you've had a massive sort of coming down to reality or coming down to earth of a lot of these like drivers. So it was never supposed to be that good, but it's actually not that bad now. It's just almost optics of things that happen in Argentina. The more I would say um, acute problem is with Clover, which is kind of their Square, which is a huge business, $200 billion in volumes. It's a massive business, or more than that, probably 300. Massive business. They've raised prices too much. And the channel, the way the business works in the US is you go through a channel, like through ISOs, ISVs, independent sales organizations. They shied away from Clover because they're like, oh wait, our pricing is too high. The merchants, so the bodega, the cupcake store, they don't want to pay those rates anymore. So it's just like inflation. It got to the point where people are like, pushing. It's like the sweet green story. It's just too expensive, right? And um, Mike Lyons, I'm a big fan of his, and guess what? We're also seeing them in 2-3 weeks for breakfast. I'm seeing everyone, and he's basically saying we're going to unwind those price increases. So I actually think this is a great opportunity here, because if they're going to unwind the price increases, and Argentina was just sort of basically inflated but should have never been inflated. I think that reset, the stock's going to actually work, because everything that hurt Clover, it should have never been like a double digit grower, I guess, right? Maybe we all got that wrong, but it's not a low single digit grower. I think the answer is somewhere in the middle, and it's a very stable business. I think that's what people are missing. At the end of the day, it's a bank processor with a merchant acquiring arm. It's a very stable business. So everyone downgraded. We stayed, very bullish, and I think we're going to be right on this one.
Roy, before you answer your question, just because this runs right off of that question, can I just squeeze and don't take too long on this, Dan, because no one actually cares but me. But Shift 4, talking about this name, curious what your thoughts are after talking about Fiserv and Clover and Square and all those names. How does Shift 4 fit in?
It's got its own little niche. I think now with Jared going back to NASA, right?
Yeah.
And Taylor is a great guy. I went fishing with him. That was fun. He's a great guy, and I think he's a really good leader. I think their niche is basically doing more for less. So if you think about there's a place. It's like there's enough room for everyone. It's not a one winner takes it all environment in merchant acquiring. So I think their niche is, they own the hotels, right? That's a huge part of their book. So every time you check into a hotel, a lot of times you'll see Shift 4. But two, they do more with less. So their CAC, right? Their cost of acquisition is a fraction. I think it takes them like 7 months. Their payback period is like 7 months. Toast is like double than that, or more, 2.5 times that. So they're the lower cost, lower investment provider. And I think they just did another gateway deal now. So what they specialize in is finding those like gateway only deals and turning them into like a full end-to-end processing and just expanding the yield. So I think there's been a bit of a reset in the stock because they probably overpromised and obviously under-delivered with, you know, trimming the guide. But I think 2026 should be great for them if they can actually, Global Blue is coming, is seems like a really good product, right? I was just in Tokyo, everyone's shopping, and that's like a big market for them. I'm bullish. I mean, again, for what it is, I'm bullish about it. It's not the next Tesla, but it's like a nice little merchant acquiring business.
Your price on the stock's $102 currently after earnings, which might be one of your highest upsides that you are reporting on right now. So that's all I was curious. Roy's question, or if Chris, if you have a question as well.
Yeah, and to answer your question, I just don't think I'm pretty sure we just kept it the way it was. I think like I didn't think like, look, everybody was worried ahead of, and we also published like a detailed preview. We thought they're going to miss, and I think they came in like $800,000 below. So I think they guided 590 and what's called like GRLNF. It's complicated. It's just basically revenue less, just like a net revenue number. And they came in at 589.2. Correct me if I'm wrong. I mean, it's actually I would say it's like a sigh of relief given the anxiety. And we were also worried. I'd say, to be honest, we published like, I would say more kind of reserved preview on them. So the fact that they only missed by $800,000, that was a huge sigh of relief in this environment. I mean, restaurants, I mean, you're seeing some of those restaurant stocks, right? They're not doing well for a reason.
Yeah.
And these guys have a huge exposure to resorts, restaurants. I mean, there's the worry with the government, restricting like airlines. So that's going to impact hotels. Like they're in the eye of the storm and they're still kind of chugging along. I think that's pretty good.
So I wanted to ask you about one more name, and if you can't talk about it, just let me know. I see that you cover strategy, and we're curious more, not so much on strategy, but on Bitmine Immersion, Tom Lee's digital asset treasury. If you can't talk about Bitmine specifically, just like in general, is there room for another digital asset treasury to really thrive, like strategy?
I mean, I have a buy on strategy. I mean, we still think Bitcoin prices are going up this year. I mean, I think on CNBC on Crypto World, wasn't he saying 150? Michael Saylor that he predicts. I don't have as good of, my crystal ball is broken, but I still think that, our working hypothesis is that Bitcoin is still going up. I don't have a view on any other, kind of treasury company. So we're bullish. I mean, the key thing is, like, if you think about this, the key thing on these things is the MNAV, right? And is the MNAV going to expand or not? That's what's going to be the make or break moment. But that's more, the MNAV is more of a, if you think about this, is a, Bitcoin is, I think about it like that. Bitcoin is like a VIX on the NASDAQ, and MicroStrategy is a VIX on Bitcoin, and the MNAV is a VIX on MicroStrategy. It's like, so if Bitcoin prices go up, everything's going to work. And that's still our working hypothesis, in our, does that make sense? That's sort of the packing order here.
Sure.
What about?
But I don't have a view on the other thing. I just don't. I mean, I wish I did. I already cover so many names.
What about Dan on the underlying ecosystem? I mean, you're bullish Bitcoin, and it's obviously a mainstay, has some first mover advantage from a brand perspective, awareness perspective. I think Ethereum is making waves now from the utility point of view as a blockchain. And I mean, Tom Lee's entire thesis around Bitmine Immersion as the biggest digital asset treasury is that Ethereum is going to be the blockchain of choice for Wall Street from a builder's perspective. Is that something that, I mean, if you have any opinions or you subscribe to, or like where do you sit on that scale of bearish to bullish on Ethereum relative to Bitcoin?
I mean, the honest answer, I don't have a view, and I don't even have I'm not supposed to have a view on Bitcoin. I'm just saying our official kind of stance on it is that, the reason we think MicroStrategy is going to work is because we think Bitcoin is going up. So I'm not a Bitcoin strategist per se, but I do think I think there's more, I mean, in this area, I think there's potentially more of a winner takes it all potential than in some other areas that I cover. maybe that hopefully kind of explains it, right? Like,
We'd love to have you back, so don't say something that you're not allowed to say.
no, I'm not saying. I'm just saying in general. I'm just being somewhat philosophical. I think there's more of a, again, I'm just looking at it very objectively, at everything. So yeah, it's probably
Sure.
better because I'm not a Bitcoin or an Ethereum strategist, and I'm not as smart as Tom Lee. Definitely not as rich.
None of us are.
None of us.
So I don't think, but we think that, again, our official model or, is saying that Bitcoin is going to rise from here. I hope we're right. I mean, we always want to be right, but I'm not it's very tricky because I'm not a Bitcoin strategist and I don't want to be one.
So real quick, I know we've got a hard cutoff, but talk to me. So one of the names that I would have expected to have run. So you had the big run like January, February, and then everything sold off into April. And then you've had some names like SoFi and Robinhood that have really shot past kind of those call it January, February highs. And then you've got other names that have kind of pittered out underneath it. I think Affirm is one of the ones that's been executing really well, but is still below their 52-week high or pretty far off their 52-week high. Talk to us about Affirm, just real quick, the 2 minutes because you got to go.
Yeah,
and why you're bullish there.
Because it's a very different story because the TAM is infinite. It's $10 trillion, whatever, all of credit, right? They're catering to that, younger people that don't like credit cards, don't like to kind of revolve that. They're all about taking risk. So from an investor perspective, they're not just like, hey, here's a great marketplace and, let's have fun. It's all, you talk to Max, I'm seeing him too, by the way, in the next month. Called me on caught me between a lot of travel. But we talked to Max. Max will tell you, Max and Libor, they tell you we're all about taking risk, right? This is the key thing. As an investor, they literally hit, they hit the bullseye on everything. From a user perspective, they've got a great mousetrap. From an investor perspective, credit perspective, they just signed that deal of $750 million on October 31st, right? For another revolver or a warehouse facility, it gives them $1.8 billion to make loans. I mean, people love them because it's short-term loans. I think they turn every month or every month and a half or 2 months. So what's not to like? And back at the worst of credit rise, interest rate rise, they've only had 2 quarters of rising delinquencies. They got it back in check, and I think they missed calendar 22 or 23 GMV by 5% in the worst increase in rates since the 1980s. That tells you something about their models. So yeah, we obviously love them. Okay, this is literally the forefront of underwriting and true. Everyone says AI, but this is really AI. This is the AI of AIs.
Affirm's also going after a similar deposit banking side as well. Isn't that part of the strategy that's
same
coming
thing,
up the
same
pipe?
thing. Yeah, exactly, Tanner. So everybody wants to be your bank, and everyone has a different trick, right? So it's their method of becoming your bank is they're coming at it from a buy now, pay later angle. I think in 3 years, the firm's going to be more of a bank for a lot of people than it is today. Because remember, paychecks drive engagement, right? You don't have to force someone to send you money into the app. It's coming from your job. Now, that's assuming everyone has jobs. We can talk about it in the next podcast, right? If AI is going to take all of our jobs, then there's going to be a bank, but no one's going to have a paycheck. But that's a different story. But what I'm saying is they want to be your bank. Robinhood wants to be your bank. SoFi is already your bank, which is a great thing to have. That's the holy grail.
Oh, sorry, I just muted myself. If that's everything, then Dan, we really do
so
appreciate all the time that you've given us today. It's really appreciated.
Always a pleasure. Let's do it again.
Hopefully we do it again.
I'll report from all these management meetings that we're conducting over the next month and a half. They're going to be very exciting.
Great.
We're going to learn a lot from these guys.
Yeah, thanks for the work you do, Dan.
Yeah,
thank you so much.
My pleasure. All right. Shabbat shalom. Thank you.
Ladies and gentlemen, bye for now.